and welcome to TBR's quarterly Telecom Infrastructure Services Benchmark Review webinar. My name is Allison Crawford, and I will be your host for today's session. For the past several quarters, we've engaged with our readers through our quarterly webinars to provide additional insight into the state of the telecom infrastructure services market. We've had good questions and discussions, and we're excited to continue to connect with you as the NMP practice grows. Over to Chris, there are a few action items I'd like to cover with you. We're recording today's session and posting it on our YouTube site, TBR channel. I urge you to visit our channel to watch this presentation or any of the others we've posted. Second, we'd like your opinions and thoughts on the materials we're presenting. Please send in comments to the Q&A or chat function. Chris will at the end of the presentation. Or, if you'd like to set up an inquiry for more detailed discussion, reach out directly to Chris at the end of the webinar to set up that discussion. So we'll send the slides out to everyone registered for today's webinar within 20 hours of the conclusion of the presentation. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Let me introduce Chris Antlitz, analyst on the Networking and Mobility team here at TBR. Chris has been in the telecom infrastructure services market for the past 5 years and guides the research on our TIS benchmark. His insight into operators and their competitive strategies has helped our clients improve their strategic go-to-market plans and improve performance. And let me hand this over to Chris.
Great, and welcome. So your key telecom infrastructure services market in 3Q12. So the things that we see going on here, first is spending, and it's really taking two directions here. One, searching for efficiency, and searching for revenue. And options are, and at different tiers, are making different strategies in each of those areas. I'm going to do a little bit more of that through the presentation. The second is about professional services. Now, the market that is a decline of about 5% year over year. A few reasons for that. One is operators are deferring non-core projects, and project durations get extended. The other thing for professional services is the business that was taking place a year ago was higher because operators to deploy some LTE networks and some new business models around shared data plans, etc. Primarily took place in North America, but that gave a bump to the market a year ago, so it's an unfavorable comparison. The point that I want to make here on professional services is that market has slowed down quite in the last years, and we're seeing some of the macroeconomic issues that are coming to the forefront, causing these deferrals of projects and these project durations. The third thing we're going to be talking about is consolidation, particularly in Huawei and ZTE. They're going to continue to play a key in consolidation, and they will be picking apart some of the business that Alcatel-Lucent and Nokia Siemens are exiting as they downsize as part of their restructuring. So with that, we'll before individual service segments and geos, I just want to give an overview of what is telecom infrastructure services. So this is a community model that we've created. It tracks the 41 largest TIS suppliers on a global basis across main service categories, which is deployment, maintenance, and managed services, and its performance across the 4 main geos: North America, Central Latin America, EMEA, and APAC. What this information is identify leaders, lead strategies, growth opportunities. We do a little margin analysis, and we really get a good feel for what's going on in this market, what are the numbers, who's succeeding, who's not, and why. So a list of the 40 vendors that are included in the telecom infrastructure services benchmark. We have a pretty broad exposure here. You have the traditional network equipment suppliers like Ericsson, Alcatel-Lucent, also some of the more SI-oriented firms like IBM, HP, Accenture. Spectrum, there's some of the more niche players some of the telecom software players, and like CSG systems, some of the tower companies, primarily involved in the deployment of new cell sites, like American Tower and Bechtel. This chart shows the top 10 firms in the TBR market by revenue. Stand out here. They put up double-digit growth across all major service categories, and that was driven by a mix of organic and inorganic growth. The bump there was from Telcordia, which added some C&S business and some managed services business around software, so OSS, BSS systems. That helped Ericsson. And they also purchased some other small C firms, which also. Alcatel-Lucent, Siemens, let's talk about them a little. Restructuring, that's been impacting their top lines, but margin improvement. So both of those firms have shied from focusing on sales at all costs and are focused now on trimming their portfolios and focusing on more of the high margin, higher value services. There's a recognition that they can't compete with Huawei, ZTE, some of the lower cost firms. A recognition that there's low differentiation in certain types of services, field maintenance and field operations, which is labor intensive and not much room for differentiation across the main vendors. On Huawei and Cisco continuing to take market share from weaker competitors, seeing inroads on business from some of the small IP firms like Telecom and Geographic, who've been not doing very well. Cisco's really being a consolidator in the space and getting really good growth from selling professionals and maintenance services in particular to their install base. So now we cover 41 suppliers here, but we're only showing the top 20 in these two charts. So in the chart, this is the second 10 firms. So more niche focused, like a China communications construction, where they focus primarily on engineering, site development, and they do a little bit of network equipment integration. The other niche players like Jubil, who got from their acquisition of Telmar, they are focused on spare parts management and other technical support type services. And then you have C, who come from their Convergence's BSS unit. Quite a broad spectrum here of second-tier firms. I would like to point out that ZTE is stumbling of late, and they're struggling to get to earn a profit. They've been losing to Huawei, who's really come to dominate some of the markets that ZTE is in. However, ZTE $3 billion credit line for banks, which are by the government, and ZTE is going to use that money to streamline their internal operations and redirect in some of the markets where they've been struggling against Huawei doing resource investment, et cetera, to and bolster their results. We're on ZTE's credit line in February. We're doing a deep dive analysis into what are the implications of them getting that quite sizable chunk of money. So I'd like to point out Cisco. They are the #1 leader here. They have a monopoly in routers and switches, and that helps them to charge a premium on their warranty services that they serve. And most of their business is maintenance. A portion of it is the deployment and the CNSI, and they do a little bit of managed services as well. But there are drivers that are keeping Cisco here. And then other players that get margins are the software firms. So selling maintenance to their installed bases. These are highly scalable businesses, typically remotely instead of on-site, which help margin profile. It allows them to get recurring business. So I'm going to do each of the service types and then each of the regions for the remainder here. So starting with deployment services, Japan and North America is driving growth. You're seeing Europe is really come down deployments, and some emerging markets have really slowed. But these three countries have really been driving a lot of the deployment activity globally. And that's LTE. Now, with said, in the United States and Canada, those operators have started those build-outs. About 2 years ago, they really started. So 2 years into this, they're starting to reach completion of at least their initial coverage phases. The shift is now turning towards more capacity upgrades, tactical upgrades, rather than blanketed coverage deployments. So we're going to see a little bit of a shift start to take place here in the deployment is going to be Central America, where LTE is just starting this quarter, is really going to start ramping up. And then we're waiting for India, China to start picking up. We're waiting for this to get issued for the 4G, 4G on, and so it's a work in progress. And those won't start taking place until end of this year in 2014. Here, away on-site kind of field maintenance, more of a remote tech support service provision. So leveraging global network operation centers is becoming the new model for maintenance services. And those that have the wherewithal to invest in those resources are getting not only better margins, but they're also driving top lines because they're offering there's better, more attractive contracts than by people on site, physically maintaining some of the infrastructure. Now, with that said, you still will need people on site, but the balance is shifting. It's getting skewed more and more towards the remote delivery. LTE deployments are supporting maintenance services right now, particularly as some of the legacy technologies like CDMA and GSM. Investment in those technologies has slowed dramatically in 2012, and that much of that business is not coming back for the legacy technologies. It's more on a maintenance mode, doing as little as possible to keep that infrastructure up to date, running appropriately. But operators are really pushing forward with these next-gen deployments in certain areas, and that's driving more warranty services and tech support type contracts. There's a few things to talk about here. So deferred non-core projects and extended duration, this was pretty pervasive, not only in Europe, some of the more challenged economies, but also in places like North America. In general, are focusing on those projects that are going to boost their ROI quickly, and are focusing less on more of the long-term overarching type contracts. Now, that's a real statement. Some operators are being aggressive and making those necessary investments in transformation, but there's a little bit of a deferral right now, and many owners are waiting for some of the large transformational contracts to come online. So operators on the consulting projects. Now, the weakness in 3Q12, the need for professional services remains strong. And drivers here. One is opportunities. So operators are going to find out how they can monetize their infrastructure in different ways. So it's been great, the decline in voice, but they need to look for more ways to leverage up their data networks. So they're looking at things like M2M and scale that boost monetization of that. They're looking at cloud and other areas where they can really leverage their existing assets and get revenue. And the other here is automation. So having consultants come in and find ways to optimize the operator's operational structure and looking at ways to optimize their CapEx deployments, et cetera. Last but not least, managed services. Strong market. OpEx reduction is central to many purchasing this right now. It's also many of the budgets that we're seeing coming into focus here. With these operators, they want the OpEx reduced and are entertaining many different, very unique to get extra edge in getting costs down. So things like full network outsourcing, which Ericsson's been spearheading that. So contracts we're seeing continue to come online. Services, much of this volume from managed network operations, where some of the smaller like Amdocs do more outsourcing of very small aspects of an operator's network. So they'll do, the OSS or the sourcing, and they'll just take that piece of the operator's cost structure. Alcatel-Lucent, Nokia Siemens, top line was way down, 3Q12. That is direct correlated with their exit from unprofitable contracts, particularly the oil contract. That was a huge contract they got out of. They were on that, so they got it. That led to a corresponding drop in the top line, churning out of those unprofitable managed services contracts and start to move value chain, looking more at option and leveraging more of their GNOC abilities to get a better margin on those services. North America growing very long. CapEx budgets remain pretty actually. LTE is the driver here. The Tier 1 operators are now in the process of deploying LTE in both the U.S. and Canada. Pointing out here, because this is the sheer volume that they're spending on LTE deployment, 2012 and through 2013. Their LTE deployment is coinciding with Network Vision, which is a transformational project for their entire network. They are not just deploying LTE, they're deploying LTE, they're retiring then, they're refarming spectrum onto LTE. They are, there's aspects here to that project, which is boosting up the amount of money that they're having to spend on this project. Spending at 3Q12, they're going to be a key driver in North America. NSN, and I might note Ericsson. If anybody saw Ericsson's earnings release today, both in North America and rebound in some of the equipment they've been selling in that region, closely correlated with the ramp-up of T-Mobile and Sprint. It's really driving them. ZTE remain shut of the U.S. They're not taking a hard stance against them. They see infrastructure from those two firms installed in this country, in the United States, and that there's barriers that they need to overcome, but they probably won't anytime soon. Moving on to EMEA. Vendor GIS revenue fell in EMEA year to year. It's just pervasive economic concerns. Others are very cautious committing to large projects. Across most European countries, the ones that are doing relatively well, operators are just, they're just about, if one country gets is that going to affect adjacent countries, and what are the repercussions there? So they're really being cautious about committing large projects, and that's been stopping LTE deployment there as well. So the focus is cost structure reduction, and managed services continues to be a major driver for vendors in particularly Europe. And leading in the growth there, and that's directly due to strong demand for their managed services offerings. Specific, the growth there, and that is all LTE deployment, and that's primarily going to Nokia, Siemens, and Ericsson. Alcatel-Lucent did not play a role in the LTE deployments in Japan, and they didn't play a role in South Korea. So Alcatel-Lucent's really been they've really been focusing on North America, as they've not been competing well in some of these other markets. Where Ericsson and Nokia, Siemens have been taking market share, holding their positions in some of these key countries. Stalling LTE deployment. There's a mix of political issues that they need to work through and spectrum allocation. Operators are waiting to get the spectrum to be able to deploy new 4G networks. Waiting period right now. We won't let those two countries start to ramp up new deployments until late 2013 and 2014. Central Latin America. So in 2012, the operators, generally speaking, made their plans for what they want to do for LTE rollout, and selected their vendors for the most part. So 2013, now they are starting to spend. And who's the beneficiaries here? A, it's Ericsson, and B, Huawei, getting an outsized portion of that business. Ericsson got 50% market share of the LTE contracts in Central Latin America, so they are very strongly positioned there. And while their growth slowed in 3Q12, but in their earnings results today and through 2013, this will be a very strong growth market for them and a few other select vendors that have resources and investments in that region. We're back to the theme. So we've looked at the search for efficiency, search for revenue, indicative of operators focusing on managed services and other OpEx reduction, using consulting to find OpEx reduction opportunities. However, professional services is still a soft market due to economic factors, and the other thing is we see Huawei and ZTE consolidating market positions, and see the ramifications of the restructuring from Alcatel-Lucent, Nokia, Siemens, impacting their top lines, but how that's going to ships and get them back on a growth trajectory. So, Renee.
Thanks, Chris, and thanks for those of you who have sent the questions through. I'd like to encourage you now, if you have any questions, to send them through. The first question we have is, on an aggregate level, what will drive the TIS market in 2013?
Things going on here that are really going to move the needle in the industry. In the first, everybody's talking about it, but LTE. So when is that going to happen? Well, Central America is going to start very strongly mid-year, and America is going to remain at an elevated spend level through 2013. Now, those two regions will start to slow with the addition of Japan, South Korea. Those areas are going to slow in 2014, but the slack will be picked up by India and some of the other, and Europe, where they have deferred these things, but they will have to start. And that's the time frame that we see happening. So there's really going to be a handoff between where taking place currently and where it's going to be a year out. The second is services will continue to be a big driver here. Missions and, Huawei, Ericsson, ZTE, they are all really pushing forward to get those contracts, even though some of them might be low margin. But they're going to be getting a lot of that business, and that's going to be driving their top lines.
Okay. Can you comment about the relationship of OpEx versus CapEx expectations?
So, a lot of different factors. So, to speak about what we know right now, CapEx expectations for North America look very good for this year. We've had several operators come out and say they're going to be spending more than originally forecasted for 2013. AT&T with their VIP program, I'd like to highlight. We expect Sprint to come out with another project to do a transformation deal, kind of like they did for their own network for Clearwire, now that they've bought a majority stake in the company, and they're going to pay for the SoftBank money they just got. So expectations look very good in North America this year. In Europe, there's going to be a small decline. China, pretty stable, maybe a little decline in the first half of the year. So the outsourcing select functions of their cost structure. So the communication outsourcing, OSS, BSS outsourcing, so maintenance, they can outsource that, like things like spare parts management. They're already spending on OpEx. So what they're doing is, how can we spend on that OpEx and then outsourcing some functions where they're getting cost savings, whereas the CapEx is, investment going to be, and they're looking at their roadmaps and places there on what they're going to need to spend.
Great. Come through. Can you speak a little about the $2 billion credit line ZTE won and how that may impact the telecom market going forward?
So ZTE, again, we're doing a special webinar on that, just talk about the implications of that credit line. Big deal. How much they're getting in relation to their market cap. It's several higher than what the company's even worth on the market. The webinar is going to be on February 20th, so we'll be inviting that separately. So if you look at how much money they just got, companies like Nokia, Siemens, Alcatel-Lucent, who are getting like $2 billion credit lines, huge sum of money right now to go out and drive business, financing to customers at low or no interest rates, really get back on track. We'll go into that in more detail in the other webinar.
What do you see getting the professional services market back to growth, and when do you suspect this will occur?
So, I think it's going to start ticking the second half of 2013. Operators, just put out those LTE networks. They need to get, they need to get those networks in new ways. So applications come into play here. The data networks, capacity to extend to those. So opportunities for them to get new revenues, and they need consultants to come in and help them implement those business models. And the second aspect of this is things like transforming their internal cost structure. So OSS, BSS, optimization behind it, transferring from legacy systems onto next-gen systems. So take America, for instance. Most of the OSS, BSS in North America is legacy systems that are optimized for voice. As operators need to optimize those systems to build shared data plans, M2M connections, connected device connections. So they need systems that are scalable and that are to deal with the data end of the network. So there needs to be investment there. Operators right now have been taking a patchwork approach. They've been making tactical investments in making sure their systems can handle just enough, but eventually they're going to have to do complete system overhauls and really get those systems optimized for this new, as they make the shift from voice to a data world.
Question come through. Is there opportunity in the TIS infrastructure professional services market for small to mid-size equipment suppliers to enter and grow at a decent level? Wireline versus wireless make a difference?
There is definitely an opportunity, and there are many, many players in professional services market. I know Ericsson is very acquisitive in that market. They just bought Devo Team a few weeks ago, which is a French CNSI firm. A string of CNSI firms, small firms, but they fill a niche part of the portfolio. Those firms, pre-acquisition by Ericsson, those firms were all doing very well. They get a decent margin. They have pretty good growth prospects. But as the industry consolidates and you have these huge players like Accenture, Ericsson, Cisco even is big on professional services now, there is a squeezing out effect, and they're getting more and more portion of the business in the market. Now, back to wireline versus wireless, doesn't really make a difference. Keep in mind that the wireless networks also require wireline infrastructure to support it. So consultants need to be well versed in both there to operators with types of planning projects, design projects.
Last question that's come through. I want to thank everyone for joining us today, and Chris, thank you for taking the time to answer these questions. You can follow Chris and TBR at the Twitter handles listed here, as well as our pages on SlideShare and YouTube that we mentioned. I'd like to encourage you to join our group on LinkedIn as well. You can find those URLs listed here. Before we sign off, we'd like to ask you to take a brief survey as you're exiting about today's webinar. Make sure that we're getting your feedback to improve our performance quarter to quarter, so any comments that you have are greatly appreciated. Leave the chat function open for the 5 minutes or so, just to give people a last-minute chance to ask any additional questions or set up some additional conversations with Chris. And if we don't hear from you, we look forward to speaking to you guys all again next quarter. And just a reminder that we are doing the ZTE webinar on the 20th, and if you'd like to register for that, reach out to either Chris or myself, or just look for the invite that will be coming through in the next couple of days. Thanks, and have a great afternoon.